Which is the best artificial intelligence stock to buy? Is it Palantir Technologies stock? Is it C3.ai stock? Or is it Upstart Holdings stock? I'm going to answer that question in this video, comparing the three AI stocks across four different financial metrics. So let's begin. Starting with revenue growth. So let's look at Palantir first. Revenue growth has been decelerating for the data analysis company, but recently ended at 17.5% year-over-year growth. Next, looking at C3.ai, revenue decreased by 4.45% in its most recent quarter, and there was a report coming out of a company suggesting that C3.ai might be over-reporting its revenue growth, and I've kind of alluded to some of the risks facing C3.ai. One of those risks being that 50% of its revenue comes from just one company. That company is also a strategic partner for C3.ai. So it might suggest that its revenues are not as sustainable as might appear on the surface, or at least they're not as diversified as they appear on the surface. That said, C3.ai has also suggested that it has a new artificially intelligence infused product coming out in the spring of 2023, so anytime now, and when that product comes out, that could spur an increase in sales. Finally, we have Upstart, whose revenue decreased by 53% in its most recent quarter. This is following huge gains in 2021. Revenue increased by more than 800% in one quarter in 2021. Upstart uses artificial intelligence to inform lending decisions. So it's a platform that brings together borrowers, and it attracts lenders onto its platform to lend to the borrowers on the platform. Now, as a last resort, Upstart also uses its own money to lend to borrowers on the platform. However, it would prefer that the third-party lenders do all the lending and Upstart just attract the fees from bringing those two parties together. Now, it remains to be seen if its AI infused proprietary software for making lending decisions is better or more effective than traditional lending decision criteria. We will know more about that as more time goes on and as more data comes out from the loans that have been made on the Upstart platform. But undoubtedly, it has been using artificial intelligence, and so that's going to be a significant data that will come out for investors to digest as that data on its loan portfolio comes out. The next thing I wanted to compare these three AI stocks on is their net income margin, that is their net profit as a percentage of revenue. Looking at this metric, you have C3.ai that's losing the most money at 76% net loss on the bottom line. Next, you have Palantir losing 19.6% on the bottom line. However, Palantir is the only one of the three that has continuously improved this margin, and Palantir has forecasted that its fiscal year 2023 will be GAAP net profitable. That means this net profit margin will be positive. So it'll go from negative 19.61% to some positive figure if we fast forward 12 months from now. And then Upstart is the highest here at negative 12.9%, but that's moving in the opposite direction. And I suspect this is going to continue lower as the platform has been pressured by this macroeconomic conditions of fears from third-party lenders lending on its platform. They've reduced the amount they're willing to lend on its platform, and so these profit margins are likely to be pressured in the near term for Upstart. The next thing I wanted to compare these companies on is their cash flow from operations. And looking at this metric, Palantir is the best and improving its cash flow from operations. 78.76 million in its most recent quarter, and it's been positive on this metric going all the way back to early 2021. Meanwhile, Upstart was positive in this metric but has turned around and is losing a lot of money on this metric, negative 252.8 million in its most recent quarter. C3.ai also losing money here, 51.9 million in its most recent quarter, also moving in the wrong direction on this metric. So Palantir, the best in class here, and the best in class in terms of net profit margin trending. Finally, I wanted to look at their valuations. I wanted to compare these three AI stocks on their valuation. I chose to use the price to sales ratio, and according to this metric, C3.ai is the most expensive at a price to sales of 9.261. Then we have Palantir at 8.760, and finally we have Upstart at 1.735. Now we also notice that these three AI stocks are significantly down in terms of their valuation, which is true. Their stock prices have fallen meaningfully off their highs as investors have become less interested in unprofitable growth stocks, and these three artificial intelligence stocks have bared the brunt of that changing investor enthusiasm. So if I were to pick one of these three artificial intelligence stocks to buy right now, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would pick Palantir. The company's doing the best in terms of cash flow from operations. The company is about to reach profitability. In fact, its most recent quarter was GAAP net profitable, and the company is forecasting a GAAP net profitable year for the current fiscal year. So for those reasons and everything I talked about in this video, if I'm looking for an AI stock to buy right now out of these three, I'm picking Palantir Technology stock. Alright, so that's all I've got for this video. Thank you so much for watching. I hope I'll see you again next time.